Hello, everyone. Welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. You can get in touch with me on Discord. My name is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions and comments related to the topics of my presentation, as well as the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPless. Here are the key tenets to my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and most consistently in the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 or the NASDAQ 100. And there are also occasions where other stocks, opportunistic setups like I'll go over today are also heavily driven by options trading and market maker hedging activity. So let's move on to the equity index futures for the S&P 500. SPX is the underlying index. SPY is the ETF version of that index. And the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of the index. And the NQ futures contract is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. And this also works for stocks. When traders buy calls in a stock, market makers sell the calls and they have to buy stock to hedge their delta exposure, and that helps to fuel that move higher. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned to the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset and the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Here's my agenda for today, Wednesday, February 12th. First of all, I want to go over news items, economic data, events, and earnings for today as well as the rest of the week. Then I'll go over my positional analysis. Then I'll review some setups earlier today. Then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with the economic data and events. So, of course, today the CPI data came out at 8:30 a.m. Eastern Time. We'll start with that. And this data definitely came in hotter than expected. The CPI, core CPI, all greater than expected and greater than the previous number. And the market had a very negative reaction to that. This is the ES futures and Bookmap. And this is a sharp drop reaction to the data, CPI data. And now the S&P 500 is trying to recover. So that is the reaction to the data. All right, Jerome Powell was testifying before Congress today. He testified before the Senate Banking Committee yesterday, and I believe it was the House Financial Services Committee today. Not much of a reaction. That was at 10 a.m. Maybe a little bit of a pullback. All right, so that is the data and events for today. For the rest of the week, tomorrow PPI data comes out at 8:30 a.m. Eastern Time, and at 8:30 retail sales comes out. Note next week, Monday is a market holiday. It's either President's Day or the Washington's birthday, depending on how you look at it. But anyway, the market will be closed. I will not be streaming, but I will be streaming on Wednesday and Friday next week. So 2 days next week as usual, but Wednesday and Friday instead of Monday and Wednesday. All right, so that is the data for today as well as the rest of the week. I'll talk about more about earnings when we get to stocks in just a couple of minutes. All right, so let's move on now to positional analysis. I'm going to start with the S&P 500. And as always, I'm going to take a look at the underlying index, SPX. This is a one-day, one-year chart for SPX. The uptrend still intact, but SPX definitely in a period of consolidation here. But still within that linear regression channel, uptrend channel. All right, so that is a 30-day, 1-hour chart. Let's take a look now at a little bit shorter time frame. Let's go to so that was a 1-year chart. Let's go to a 30-day, 1-hour chart now. So I've talked about this support line, 58.32. Here's the final shakeout. Then a rally up above 6,100. New high 61.28. Now this new downtrend line has formed. More about this cluster here in just a couple minutes when we get to the 1-minute chart. An important level right around 60.50, 60.55, something like that. All right, let's take a look at the levels on this chart. First of all, the expected moves. Dashed purple lines showing the lower and upper weekly expected move based on the options market, based on the closing price for SPX. From last Friday, those levels remain in place for the entire week. Then the lower and upper daily expected moves shown by the dashed blue lines. Those change every day, again, based on the options market, based on the closing price for SPX from last Friday. I do post those levels in Discord every day the evening before. All right, so note SPX did trade down below the lower daily expected move and now trading in that range between the lower and upper daily expected move. All right, that's the expected moves. Now the Spotgamma levels. These are based on gamma-weighted open interest that provided to Spotgamma subscribers. I'm going to point out the key daily levels. First of all, the put wall at 5,900. That's a strike with largest net negative gamma. That can be expected to act as support. Note that level did move down from yesterday. So the put wall has been moving up and down between 6,000 and again now moving down today to 5,900. The next level up is the 6,000 absolute gamma strike. That's a strike with largest absolute positive and negative gamma. And note that level did act as support before the cash opened. So this is, of course, SPX only trades during the regular trading hours, but that level did act as support before the before the regular trading hours. Next level up is the volatility trigger. That's at 60.60. Kind of in range of this cluster, which has been trading right around the volatility trigger, which has ranged from 60.45 to 60.60 in the last few days. So that level did move up. So that is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price dash their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And more about gamma in just a few minutes. And finally, the call wall remains at 6,200. That's a strike with large net positive gamma that can be expected to act as resistance. So those are the key daily levels. Again, put wall shifted lower, volatility trigger shifted higher. All right, let's wrap up our view of SPX with a 1-minute chart. I've zoomed out a little bit further than normal. I'll zoom in just a minute so we can get a close look at the levels in play for today. Just highlighting this range that I pointed to on the higher time frame charts. This zone up and down around 60.50. Volatility trigger has been around this level, but it has acted as resistance, support, 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 resistance, now support again. So that 60.50 level, very important, that zone. A lot of price action and reversals in that level, in that range. All right, so for today, let's zoom in on this. All right, so again, before the cash open, the 6,000 level, absolute gamma strike, that was noted as support in the AM Founders Note, acted as support. Again, before the cash open, now the 60.33 zero gamma level did act as resistance earlier. Price broke above that level, resistance at the 60.50 level, which now has been acting as support. So SPX trading above the lower daily expected move. Looks like it's having a little trouble getting above the volatility trigger at 60.60. All right, back to Bookmap now. Again, the reaction to the CPI data, very bearish. There's the support at the 6,000 absolute gamma strike. That was noted as support in the Spotgamma AM Founders Note. No, that is SPX 6,000. And there is a difference in price between ES and SPX. And today that is somewhere between 21 and 22. I'm using 21, so ES minus SPX, that offset is 21 points. So I'm showing SPX 6,000 at ES 60.21. All right, some other levels in play for today. There's that 60.33 zero gamma level that I mentioned before, acting as resistance. And then the 650 level, large gamma 4, acting as resistance, then support. Now it looks like SPX, ES is trying to break down below that level. Hello, Mr. 36. Welcome. Glad you're here. All right, so those are levels in play. Here's the 60.60 volatility trigger. And that volatility trigger can often act as support or resistance. So now acting as resistance when tested from below. So very important to note where SPX ES is trading in relation to the SPX volatility trigger, as well as the SPY volatility trigger, which is at 603, right below the 60-50 level. So again, I have SPX levels on this chart and SPY levels, as well as key numbers for ES. There's the 60-50, ES 60-50. All right, so far the uptrend for today is still intact. So we'll keep an eye on ES. All right, so that's the S&P 500. Again, key for today, I think, is the support at 6,000, and then reaction at the 60-60 volatility trigger. All right, let's move on. So shifts in levels again. Volatility trigger higher, put wall lower for SPX. And for SPY, the call wall shifted lower. So overall, minor shifts in levels for the S&P 500. Let's move on to NASDAQ now. This is the NQ futures and Bookmap. Similar chart, sharp drop after the 8:30 data release. Support at this cluster of levels. More about that in just a minute. And then a rally with some deep pullbacks, still ongoing. All right, let's take a look at the underlying index levels. I'm going to start with QQQ. Actually, NDX. I've got that chart, NDX. Hello, David. Welcome. Glad you're here. All right, so let's start with NDX. Cluster of levels that I mentioned. There's the NDX 21,450 call wall, absolute gamma strike. That's at 450. And then the volatility trigger is just below that at 440. So it looks like the 450 level, around that level, acted as support. And then the 21,500 level, that's a large gamma 4. Acted as support for this first pullback. So NDX levels key in providing support today. All right, let's take a look at QQQ. All right, for QQQ, this is a combo 1 level here. 521.84, and around that level acted as support. 525, large gamma 2 level, and then the volatility trigger 0 gamma level at 527. So QQQ has recovered its volatility trigger. All right, back to Bookmap. Again, here's that cluster of levels. And here's the support at that 450 level after the cash open. So price did trade down below that level before the cash open. But after that cash open, that 450 level acted as support. And there's the 21,500 level. So key NDX levels acting as support. And now NQ has recovered its lower daily expected move. All right, so that's NASDAQ. More about setups in just a few minutes. All right, let's wrap up our positional analysis by taking a look at Gamma. This is market maker's gamma notional position on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, Russell 2000. These numbers are all fairly neutral. And for the S&P 500, these numbers both shifted higher. Positive for SPX, negative for SPY. The thing to remember about gamma is this gives us a sense of volatility for the day. In positive gamma, we expect lower volatility, market makers trading against price. And negative gamma, we expect higher volatility with market makers trading with price. So again, gamma notional shifted higher for the S&P 500 and shifted lower for the NASDAQ and Russell 2000. All right, let's take a look at a current view of gamma. So this is the trace tool. This is available to Spotgamma subscribers, and this is not exactly real time. It's updated every 10 minutes, but the charts, the price action is real time. I'm using 5-minute candles on this. So let's step back. Well, first of all, the blue shaded area, that's positive gamma. So you can see now SPX, this is for SPX, trading in a zone of positive gamma. You can see the GEX gamma exposure bars over on the left. So SPX trading in a pocket of positive gamma with negative gamma below and above. Let's take a quick step back in time. Go back to just after the cash open. First update after the cash open. Fairly low stability index, indicating a potential for higher movement, and mildly, very mildly positive gamma at the beginning of the day. So let's step through time. So as price SPX moves higher, SPX moves into a pocket of more positive gamma. Stability index has gone from 20% right now to 50%. And again, SPX now on a pocket of positive gamma. Stephen, hello, welcome, glad you're here. Ask me, can I speak on open interest and net open interest? That's not something that I normally look at. If I have time, I'll get back to that. I like to keep it on gamma here. This just makes more sense to me. The gamma exposure rather than open interest. All right, so again, I'll if I have time toward the end, I'll take a look at that. I know the charts that are posted and the typically in the PM Founders Note have open interest. I prefer gamma exposure here. Makes more sense to me. All right, so that is the current picture of gamma. So based on the gamma exposure at the beginning of the day, I was looking for moderate to high volatility based on that low stability index and also the pretty much neutral gamma notional. And direction really kind of depended on CPI data and the reaction after the data release and after the cash open. All right, so let's move on now. Let's take a look at some setups. I'm going to start with the indexes, start with the S&P 500. Then I'll get to some stocks. There are some very interesting moves in stocks today, and I'll talk more about, again, some opportunistic setups today based on news and earnings. All right, so let's start with the indexes, though. Start with the S&P 500. And as always, I'm going to start by taking a look at what options traders are doing today. This is the hero signal. This is available to Spotgamma subscribers. This is real time. So everything that we've looked at so far, first of all, is based on static data, then trace, which is not really real time. It's updated every 10 minutes to now real time data. This is showing options trades and market maker hedging activity in real time for the S&P 500 index. This is showing, again, options trades, market maker hedging activity for the index components: SPX, SPY, XSP, and ES futures. The orange line is for calls. The rising orange line indicates traders are buying calls, market makers sell the calls, and in this case, they have to buy ES futures to hedge their delta exposure. And the blue line is for puts. And a falling blue line indicates traders are buying puts, market makers sell the puts, and again, they have to sell futures to hedge their delta exposure. But overall, it looks like delta notional is positive, call buyers driving price. This is the other hero signal that we can take a look at for the S&P 500. This is the S&P equity signal. And what this is showing is traders are buying calls and selling puts. This is for the S&P 500 stocks, all 500 stocks in the S&P 500 index. Both are providing good signals today. The call line for the S&P 500 index component, and then really both lines for the S&P 500 equities, S&P equities. All right, let's go to Bookmap. Go back to ES. Let's zoom in on this. Starting at about 9 o'clock up until 1 o'clock, so 4 hours worth of data here. And again, I just want to show the support. Whoops. Support at 6,000. So before the cash open, if you do trade the cash open only, you know that 6,000 did act as support. Pull back right at the cash open. Another pullback down to around the 600, SPY 600, absolute gamma strike put wall. And the S&P 500 makes a series of deeper pullbacks. Very good long setups. Looking in the subchart here, you can see that rising dark blue line, that's cumulative volume delta, aggressive buyers coming in at every pullback. Green volume dots, those are market buy minus sell, the volume dots. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. Sellers are exhausted. Aggressive buyers come in on these duple pullbacks. Price moves higher. Initial resistance at the 60-50 level, then at the volatility trigger at 60-60. All right, so that's the S&P 500. Let's take a look and see what options traders are doing now. All right, so this is let's zoom in on this just a little bit, then we'll get to current time. So this is a bullish opening drive. Traders aggressively buying calls, also selling puts, and the put sellers start buying puts as the call buyers take their foot off the gas, price drops down. Then the traders stop buying puts, start selling puts, start buying calls. That is a bullish continuation, bullish momentum pattern. And again, they take the foot off the gas. Price consolidates a little bit. Call buyers come in. looks like a call peak pattern there. Full alert with that sharp move higher in the call line, and then looks like a potential reversal, but that doesn't last long. Another call peak. Now in this case, traders had already started buying puts, start selling calls, price moves lower, call buyers come back in, full alert gets your attention, and price moves higher again. So right now, traders are buying calls up until about 1 o'clock. They took their foot off the gas. The put line was flat. Right around 1 o'clock, they stopped buying calls, started buying puts. Now price is moving lower, finding a resistance at the 60-60, showing its hedge wall there, but it's also this volatility trigger for an index. Let's take a quick look at the S&P equities chart. So when we break that down, look at patterns, it starts to make a lot more sense. In the equities signal, traders continue to buy calls, and the put sellers have taken their foot off the gas. So the put line is flat, but they continue to buy calls. But right now, it looks like the index traders are more in charge. All right, so that is the S&P 500. Let's move on to NASDAQ now. NASDAQ, on Monday, I thought the NASDAQ combined signal, NDX, QQQ, was helpful, not so much today. So let's move on. So that is just like the S&P 500 index signal, this is the NASDAQ index signal showing options trades and market maker hedging activity for NDX and QQQ. Let's move on to Mag 7. So what this chart is showing is options trades and market maker hedging activity for the stocks known as the Magnificent Seven, the large component, the stocks, 7 stocks that make up a large component of the NASDAQ 100. And just like the S&P equity signal, which is actually the Mag 7 plus 493, traders have been buying calls and selling puts. All right, let's go take a look at Bookmap. Bookmap, NASDAQ, similar chart. At the cash open, support at the NDX 450 level, pull back to the 500 level, pull back entries as price, deep pullback entries as price continues to move higher. Now also has slowed down some consolidation. Looking at the components in the subchart here, you can see that rising cumulative volume delta, aggressive buyers, again coming in at every pullback. Sellers become exhausted, aggressive buyers come in. Price moves higher. All right, any questions about the indexes? Thoughts, comments? Looks like traders are fading this move, large traders with iceberg orders. They use to hide their size. That's shown by the falling light blue line. That's pretty typical. Large traders sell strength and buy weakness. Let's just check icebergs on S&P 500. Same thing. Large traders selling with iceberg orders. Selling strength and buying weakness. We'll get back to the S&P 500 in just a few minutes. All right, let's take a look at some stocks. All right, so what I want to do is, normally I just look at the mostly the Mag 7 stocks, but I want to show some other opportunities, and in this case, stocks that reported earnings All right, so yesterday, let's start with Shopify. Shopify did report earnings. And that was before the open yesterday. That made up a very nice setup. I did post that in Discord and on X. So there was a little bit of a bullish opening drive, and then nice call peak pattern, very nice reversal, bearish reversal, and then Shopify found support and spent the rest of the day trying to recover. So that was yesterday before the open. Now let's take a look at stocks that reported after the close yesterday. SMCI, Lyft, Upstart Holdings, and Confluent. I want to look at all of these stocks. I'm going to start with one Mag 7 stock, Tesla, which has been pretty weak lately, making a recovery today. Then we'll take a look at these four stocks. So this is one Mag 7 stock, then these other stocks. And note, hero data is available for SMCI, Lyft, and Upstart, but not for Confluent. I'll show you something else that you can look at to get some guidance for stocks that are not in hero. All right, so let's start with Tesla. Then we'll get to the other four stocks. Tesla, been very weak lately. Not so much today. And note, this should look familiar. This chart. Almost identical to Mag 7, which is actually Tesla plus 6. All right, so there's Mag 7. Now Tesla. Traders are buying calls and selling puts in Tesla, taking advantage of the dip to get long in Tesla. All right, key levels, 330, key gamma strike, 342.50 hedge wall, bullish opening drive, flow alert comes in, get your attention. Traders selling puts from the open, and then they started buying calls just about 5 minutes later. Now it looks like the put sellers have taken the foot off the gas, but they continue to buy calls. Now it looks like Tesla finding some resistance at that 342.50 hedge wall. So let's go take a look at the Bookmap. Go to Tesla. All right, so there's the support at the 330 level. Again, 330, key gamma strike. Support at the level, at the open. Pullback entries. There to VWAP, that light blue line. And I have the market pulse price change indicator on here. That is this oscillator. Let me turn off something to make that a little bit more clear. All right, so the oscillator, market pulse price change. These extremes typically line up with the deeper pullbacks that are good for pullback entries. Here, the bright red, we're looking for the bright red for pullbacks in an uptrend. So again, 330 key gamma strike, 342.50. Price did break above that level. came back and retested. Now support. All right, so that's Tesla, very bullish day. Traders finally taking advantage of the dip in Tesla to sell puts and buy calls, get long Tesla. All right, let's take a look at some of these stocks that reported earnings. First of all, let's go to Lyft. Very bullish opening drive in Lyft. Let's see what options traders are doing. Zoom in on this just a little bit. So in the morning, it was mainly put sellers. Now, of course, this options volume is pretty light delta notional, especially compared to Tesla and Nvidia. These numbers are a fraction of the delta notional of those stocks, but it looks like put sellers helping to drive the price higher. Key levels 1350 hedge wall, 14 key gamma strike. So again, bullish opening drive, put sellers in this case, and some call buyers. But they really took their foot off the gas right around 10:30. Call buyers came back in, started to move price higher around 11:30. But Lyft has found resistance at the 14 key gamma strike, right there, that light blue line. So there's the 14 level. Price did break above that level, but now trading down below. There've been a lot of aggressive buyers in Lyft today. You can see all the green volume dots, also the rising cumulative volume delta. That's that dark blue line. All right, that's Lyft for today. Let me check one thing. Whoops, not sure what that is. All right, so that's Lyft. Let's take a look at SMCI. Let's see what options traders doing. Very interesting pattern here in SMCI. Let's zoom in on this a bit. And this was just a great example of a call peak reversal pattern. Full alert comes in, so you can see the sharp line, traders aggressively buying calls. Full alert comes in, signals significant options activity, and then this abrupt reversal as traders abruptly start buying calls, stop buying calls, and that fuel that had driven price higher has gone now, and price drops. So a great call peak topping pattern, reversal pattern, setting up a very nice short. Zoom in on this just a little bit more. So you can see the call sellers, call buyers driving price. So calls really driving price in SMCI today. Setting up a very nice short with that call peak pattern. Back to Bookmap. And you can see all the magenta volume dots. Actually, let me zoom in on that just a bit. Note the very small green volume dots indicating buyers become exhausted, aggressive sellers start to come in, large magenta volume dots. Again, same thing here, very small green volume dot. Aggressive sellers come in as price continues to move lower, and cumulative volume delta falling pretty much from the open. So a bullish opening print, some aggressive buyers, and then mostly magenta volume dots after that. So clear bearish setup. If you waited a few minutes after the open, shown with order flow and hedging flow. Next stock, Upstart. Another stock that gapped up after the open. Very bullish opening drive. Let's zoom in on this. Let's see what options traders are doing. Go to Upstart. Zoom in. Bullish opening drive. Traders aggressively buying calls. And a little bit of a call peak pattern there. Call exhaustion, call peak. Traders start selling calls. Stop selling calls. Price pretty much consolidates, but that fuel that had driven price higher is gone. Price moves down, consolidates. Then about 10:50, traders started buying calls again. Price started to move higher. Stages in the late mid-morning, afternoon. Call buyers, take the foot off the gas, price consolidates. More buyers come in, and again, they've taken the foot off the gas. Now price consolidating again. Let's go to Bookmap. You can see all the high liquidity here at 90. This was the target for the move in the morning, and the call buyers took their foot off the gas before price made it up to the 90 level. Looking at cumulative volume delta, rising sharply for the first 20 minutes or so, then falling after that. Buyers become exhausted. Some aggressive sellers started to come in. Call buyers resume, take the foot off the gas. More call buyers taking Upstart up to that 90 liquidity level. Looks like absorption at that level, not those limit sell orders in the order book remain in place at 90. So still an upside target if the call buyers come back in for Upstart. All right, one more stock. This is Confluent. Another very bullish day here in Confluent. In this case, this is not a hero stock. So there's something else. If you like to look at an options activity as a driver of price, there's something else that we can take a look at. And this is tape. And I really haven't showed this before, but this is a fairly new tool available to Spotgamma subscribers. And this is kind of like time and sales for options. So I'm looking here at this key daily level, key daily movers, Confluent at the top of the list. Then down here I have options activity for Confluent. Traders buying and buying and selling puts and calls. And this is back toward the cash open. You can see mostly green here. Traders buying calls. $9.35, a lot of call buyers coming in. I do have this filtered a bit to show the larger transactions. More call buyers and traders starting to sell calls. And that stops at 10.18. Let me refresh this. All right, so let's go back, take a look at Bookmap. So again, very bullish opening drive. Traders are buying calls, although again, Hero not showing that. Pullback entries. Marked by market pulse price change. Liquidity targets up above. 36, usually the high liquidity. Traders like to stack their buy and sell orders, limit sell orders, buy orders at the large round numbers. There's 36, 37, all right, so there's another earnings related play in Confluent, very strong day. All right, any questions so far? Does anyone have any stocks they want me to take a look at? Let's get back to the S&P 500 again. If you have any stocks you want me to take a look at, please let me know. All right, so back to the S&P 500. Finding resistance around the 60-60 volatility trigger. Let's go back to Hero first. Index signal. So it looks like it may be turning a little bit. Some call buyers may be coming in, put sellers. And hello, Kenobi. Welcome. Glad you're here. Wants to look at BB. Yeah, we'll take a look at that in just a moment. Let's check equity signal. So in equities, traders continue to buy calls. I'm sorry, Kenobi. Trace is only available for SPX. Right now, again, Trace only available for SPX. I'm not sure what BB is. Is that BlackBerry? Yeah. Stock that was in play some time ago. Looks like there have been some call buyers in BlackBerry. All right, back to the S&P 500. All right, let's take a look at Trace now. Okay, yeah. BlackBerry, one of those stocks that was in play several years ago, one of the meme stocks, AMC, GameStop. I think Spotgamma needs to update Hero, get rid of some of those stocks that were meme stocks several years ago, and add more of the current AI and nuclear stocks, stocks that are in play now. All right, so again, SPX now in a pocket of positive gamma. Maybe trying to make it back up to the hedge wall. And I have here the Hero chart. Let me check which Hero chart. This is the S&P equities. This line right here, this purple line, continuing to rise, S&P equities. Let's check charm pressure, potential pinning target. Right now, what looks like the most likely pin target is right around 60.45. That's the zone between the blue buying support below, red selling pressure above. That's also the level with the highest gamma, positive gamma right there. All right, Stephen wanted to take a look at open interest and net open interest. So this is looking at gamma exposure. Let's take a look at open interest. Just at a first glance, Stephen, I find the GEX chart much more helpful. You really have to hover over this, and so this is market maker's position, long calls, long calls, long puts. So we see up above, let's say around 60-50, market makers are mostly long calls. Let's go to net open exposure. Net long calls at 60-70. Negative calls at 65. So again, this is what I like to use. Looking at this gamma here. All right, back to gamma. And Kenobi says on trace, the red short gamma area above the current price indicates short calls. Yes. Let's see. So that is 85. So the most important thing is negative gamma. So yeah, that would be short calls. We can go back to the net open interest. That was at 85. Yeah, net calls negative 1.8K. Down below, you can see net short puts. So that can help to explain that negative gamma above, negative gamma below when you take a look at open interest. So Stephen, there you go. There's a that open interest providing a helpful confirmation. All right, so again, the key takeaway, SPX in a pocket of positive gamma with negative gamma above, negative gamma below. Let's do one last check of the index. Go back to the S&P 500. So we saw, let's go back to Hero. Go back to Hero. Looked like the index signal was starting to tick up just a little bit. Looks like some call buyers coming in again, put sellers. All right, so that's the S&P 500. Want to take a look at the NASDAQ, then I'm going to wrap it up. All right, so NASDAQ consolidating really between QQQ 527 and 529 with 528 right in the middle there. All right, everyone, again, remember upcoming events. Tomorrow, PPI data comes out at 8:30 a.m. Eastern Time. Friday, retail sales, 8:30 a.m. Eastern Time. Monday is a holiday, but next week I will be streaming on Wednesday and Friday. Monday is a holiday. All right, everyone, have a great afternoon, and I will see you on Wednesday next week. Thanks. Bye.